Welcome to Tesla Daily. Here's the latest on Tesla. First up, they've launched the Cybertruck at $59,990, but it's only available at that price for 10 days. Meanwhile, production of the Cybercab is kicking off, but it's still waiting on some regulatory approvals. In other news, Tesla is facing a hefty $243 million liability related to an Autopilot crash. On a brighter note, an analyst is predicting that Tesla's Robotaxi could bring in $250 billion by 2035. And in France, Tesla has topped the reliability rankings. However, their supercharging network is seeing a decline in market share. Lastly, there are some concerns about demand for the cheaper Cybertruck. That's all for now. Let's dive into the latest news about Tesla. First up, Tesla has launched a new all-wheel-drive Cybertruck, priced at $59,990. But here's the catch. It's only available for 10 days. This move aims to boost demand for the Cybertruck, which hasn't quite met sales expectations since its debut. The limited-time offer is meant to create urgency among buyers, but it raises questions about the long-term pricing strategy and whether the demand is sustainable. Elon Musk's announcement has stirred up excitement and some confusion. The promotional price is lower than previous models, but that short window for purchasing might lead to a rush of orders that doesn't truly reflect market demand. Analysts are concerned this tactic might not drive the sales Tesla hopes for, especially given the Cybertruck's past struggles. The Cybertruck does offer impressive features, like a dual motor with an estimated range of 325 miles and a towing capacity of 7,500 pounds. However, the lack of some premium features might turn some buyers away. Plus, Musk's history of changing prices adds a layer of uncertainty about what the Cybertruck's future pricing will look like. If demand doesn't meet expectations, Tesla could face tough competition from Rivian and Ford, who are also rolling out new electric trucks. So, while this new pricing strategy could spark interest, it might not accurately reflect the Cybertruck's true market potential. Investors should keep an eye on sales data and consumer feedback in the coming weeks. Now, let's talk about Tesla's Cybercab. Production has begun on this fully autonomous vehicle, which doesn't have pedals or a steering wheel. This is a big step for Tesla, as they aim to revolutionize urban transport with autonomous vehicles. The Cybercab is set to be a key part of Tesla's Robotaxi network, offering efficient and cost-effective rides. This production phase is crucial as Tesla moves towards a future with more autonomous vehicles. Recently, the FCC approved Tesla's inductive charging technology, which will allow for seamless charging without physical connections. That's a game-changer for convenience and efficiency. But the lack of traditional controls raises some regulatory questions that Tesla will need to address. The success of the Cybercab will depend not just on tech advancements, but also on regulatory acceptance and public trust. Analysts are watching closely, as any setbacks could shake investor confidence. Next, Tesla is facing a $243 million liability due to a fatal crash involving its autopilot feature. A judge upheld the jury's verdict, highlighting the legal challenges Tesla faces regarding the safety of its autonomous driving technology. This ruling could impact Tesla's reputation and financial stability, especially as they push for wider adoption of their full self-driving capabilities. The incident occurred in 2019 when a driver using autopilot while distracted crashed, resulting in a fatality. Tesla argued the driver was at fault, but the jury found the company partially liable. This could set a precedent for future cases involving Tesla's autonomous features and lead to more regulatory scrutiny. Investors should be aware that ongoing legal battles could affect Tesla's financial performance and public perception. The financial implications of this ruling could strain resources, especially as Tesla invests heavily in developing its FSD technology. Moving on, a Wolfe Research analyst predicts Tesla's Robotaxi service could generate $250 billion in revenue by 2035. This forecast reflects growing optimism around autonomous vehicle technology and its potential to disrupt traditional transportation. The analyst believes that by 2035, 30% of the ride-hailing market will be made up of autonomous vehicles, with Tesla capturing half of that share. That would position them as a leader in the robotaxi space. but investors should keep in mind the risks, like regulatory hurdles and consumer adoption rates. Any miscalculations could significantly impact projected revenue. As Tesla invests in autonomous technology, the success of the Robotaxi initiative will be crucial for their long-term growth. In a positive turn, Tesla has topped reliability rankings in France, surpassing Toyota. This is a significant turnaround for Tesla, which has faced reliability issues in the past. The results from this study could enhance Tesla's reputation and appeal, especially in Europe. This improved ranking is important for investors, as it may lead to increased sales and customer loyalty. The study looked at vehicles registered since January 2018 and focused on early problems reported by owners. Tesla's performance suggests they're making strides in addressing past quality concerns, which could help them gain market share in Europe. As competition in the EV space heats up, maintaining a strong reputation for reliability will be key for Tesla. This recognition could influence consumer perceptions and purchasing decisions, potentially boosting demand for their vehicles. However, Tesla's supercharging network is seeing a decline in market share, despite still being the largest in the world. New competitors are entering the EV charging space, which could impact Tesla's long-term growth strategy. Tesla's supercharging network has been a cornerstone of its success, but the rapid expansion of competitor networks poses a threat. As the demand for charging infrastructure grows, Tesla will need to innovate to maintain its edge. Investors should be mindful that a shrinking market share could pressure Tesla's margins and overall profitability. They may need to invest in enhancing their charging technology and expanding their network to stay ahead. Lastly, analysts are raising concerns about whether Tesla's recent price cut for the Cybertruck will lead to a meaningful increase in sales. The new model at $59,990 aims to stimulate demand, but there are doubts about its overall appeal in the competitive electric pickup market. While the price cut might draw in some buyers, it's uncertain if it'll be enough to overcome the Cybertruck's previous struggles. Analysts are closely watching sales data to see if this new pricing strategy pays off. The Cybertruck's unique design may not resonate with everyone, which could limit its market potential. Investors should stay cautious and consider how sustained low demand might affect Tesla's financial performance. The uncertainty surrounding the Cybertruck highlights the challenges Tesla faces in the evolving electric vehicle market. Keeping an eye on sales trends and consumer feedback will be crucial as they navigate this critical phase. And that's a wrap for today's Tesla Daily Insights. Thanks for tuning in. Just a quick reminder, this is for informational purposes only, not financial advice. Catch you in the next update.